Mark, I've seen all of my friends, many managers centralize their funds to the top four, the biggest names, the too bigs to fail. Why is it bad to have a centralization of wealth to the top four? And why is that not a world that we want to live in?
Well, I think, we all believe in competition, and there is value in having a broader range of institutions that are competing for that business. So they're providing better service for the business, and most importantly, I guess they're competing to provide credit to companies and entrepreneurs. And the more you move into a banking oligopoly, the softer the competition comes on both sides. So that's one reason. And then the second reason is that the more you have concentration, the more those who benefit from that concentration are too big to fail. They're essential for the system. And then that brings moral hazard into the system. All that said, look, entrepreneurs like yourself, people who are listening, should be focused not on whether or not their bank's going to go down. They should be focused on whether their investments are going to work out. So, we've got to design a system have a system that gives that peace of mind. And it's part, the first line of defense is, do you have a well-run bank? And, in the broad scheme of things, those larger institutions are well-run and they're solid. So it's understandable that money's going there.
Mark, can I ask, you mentioned regional banks earlier. What's the future of regional banks in the US?
I would say go small or go home. I mean, it's always the U.S. banking system, relatively, a very large number of institutions by number in the U.S., kind of barbell strategy. It was dangerous to be in that awkward middle where you're a large regional and therefore you have a lot of corporate deposits above the minimum. They turn out to be much more flighty. What we saw with Silicon Valley, what we're seeing with First Republic, that's an awkward place to be. If you're a narrow regional, small, literally close to your customers, largely insured deposits, more stable funding base, you're okay. It's an okay business. You don't have a lot of growth opportunities, or you're going to get consolidated up into some of those very large institutions. So I think there's going to be really a wave of consolidation, another wave. This has happened over time, but will accelerate. And, in part, it's accelerating because the competition, not just for the regionals, but also for the large institutions, is very much coming from fintech. And as a bigger picture point, the system is moving towards a form of narrow banking as a core competitor to fractional reserve banks. In other words, banks that create their own money and leverage up. And it's able to do that. The system's able to do that because of technological changes, which make things very easy to take customer money and back it quite efficiently into the money markets and provide better returns.